Hello, friends. My name is Vijay Chalika. I am Vice President with ALTPORT Funds. And in ALTPORT Funds, we are coming up with new show, which is called Ask the Expert Show. In this show, we are talking about the different products in the investment journey. So one which is unique in the offering and which has some uniqueness from the traditional approach. So today we are discussing about Unicorn India Ventures, and we today have Mr. Majumdar sir, who is the chairman and MD of Unicorn India Ventures, which is a SEBI registered fund, which is investing in the technology driven startups. Apart from that, Bhaskar Majumdar sir is alumnus of IIT Kanpur, mechanical engineer, completed the advanced management program at Harvard Business School with more than 25 years of experience across entrepreneurship, venture capitalist, media, and technology. Previously, he held leadership positions at organizations like Times of India, Z Telefilms, Alta Vista UK before becoming an entrepreneur. He has founded and successfully exited his own digital company before entering into venture capitalism. He has personally invested 30 plus startups across India and UK with a portfolio companies cumulatively valued at $3 billion. So that's a very good pedigree of Bhaskar Majumdar sir. And today we will discussing on the Unicorn India Ventures, the current series. So what is unique about that? What are the opportunities? Which call companies we are finding, and what are the parameters that we'll be selecting on those things? Over to you, Bhaskar.
Thank you, Vijay, and thank you all for joining in. Vijay has already given my background, and I started the fund in 2016 along with my partner Anil Joshi. Anil is one of the best known startup investors in India. He has been investing in startups from a time when startups was not much known in India itself. Uh, from 2003, 2004, he was a part of a very large early family office. And then the shirt he wears, so to say, is he started India's first angel platform, Mumbai Angels, and through which he invested in a large number of companies. He spent a lot of time with ultra high net worths, explaining to them what this asset class is all about. And in 2014, when he left, and when I sold my business to a large private equity house, so both of us started talking what next to do, and we started Unicorn India Ventures. So before I come into the present series, which is in partnership with IIT Madras, it is called IIT Madras Unicorn Frontier Fund 1. Before we come into that particular fund, I'd quickly give you our vintage and background. So this is the fourth fund for us. We started the first fund in 2015, 2016. We were a AIF category 1 fund. It was a relatively small fund. It was a 100 crores fund. Through that fund, we invested in 17 companies. So a couple of things, the way we invest, it's a very interesting and unique model. We only use 20% of our investable corpus to create the portfolio. So only 20% of that 100 crores was used to create the portfolio. And the rest of the companies, the rest of the funds, we back the more successful companies in the portfolio. We position ourselves as what we call the first institutional investor. So we go early into a company. We go into a company when the company has been in existence for a couple of years. That's how early we go into a company. And then we use the 2080 rule for investing. So this has a lot of advantages. For example, in the first fund, we invested in 17 companies, as I said, and of the 17 companies, as is the nature in our industry, 4 companies were write-offs. But all the 4 out of 17, almost 25% companies were write-offs. In monetary value, because of the way we invest, it was less than 7-8%. So that is one big differentiator in our investment style that we have. The other very big differentiator we have is we are truly an all India fund. We raise money from globally, but we invest throughout the length and breadth of India. So typically most VC funds invest or tend to invest only in Bangalore, NCR, and Mumbai. In our case, we have companies from Cochin, Trivandrum, Chennai, Hyderabad, Ahmedabad, Jaipur, Indore, Bhubaneswar. Now we've done one or two in Bihar also, Patna. So in that sense, we have large and deep deal sourcing capabilities. And obviously, because we are not just looking at a Bangalore in companies, uh, a large number of deals that we do is very, very proprietary in nature. And being proprietary, as you all know, as in capital markets, also, being proprietary, our entry price into the deals is very good. So this is another very, very big differentiator we have. Coming on to the funds, as I mentioned, the first fund was a 100 crore fund for us. That fund, and we all know AIFs in India are rated by CRISIL. So that fund, as per CRISIL, is the best performing fund in our vintage. We are at a situation where we have returned almost 3.5 times capital back to the investors, and we are sitting on one asset. Theoretically, the value of this asset is equivalent to another 2.5 times. So we think, and we are looking to, exit that asset literally in the next couple of months. So the first fund for us will tend to be a 5.5 X fund for us, giving the investors 5.5 times what they have invested in a 9-year period. So giving that we take money over 5 years, the IRR of that works to some 53-54%. The second fund was a middle of COVID fund. It was a 2021-22. We closed the fund. It's still early days in the fund. It's a 250 crore fund. It's relatively early days. We have started to return some capital back to the investors. But very, very importantly for us, we believe that we have 4 or 5 companies in this fund, each of whom is capable of returning one time the capital back to the investors. So this fund, according to us, will be anywhere between a 4 to 4.5x fund also. Again, giving an IRR of early 40% is what we are looking at. The first two funds, so as a fund house, we never do consumer internet. So we don't do things like Zomato or any of the consumer internet. We have always been doing more and more engineering type of companies, what today is referred to as deep tech type of companies. So even from the first fund 10, 11 years ago, most of the investments we made were in, uh, you know, IoT companies, device companies, companies in in cybersecurity, in medical devices. So we have always tended to do this type of companies. Of course, some companies we also did in fintech and other areas of digitization, but but mostly our strength has always been engineering companies. And today, of course, everyone is talking of deep tech. So more and more, that is the only thing that we are doing. So the third fund, which for us is the biggest fund till date, it's a 1,000 crore fund, but we landed up raising 1,200 crores in that fund. That fund is a very, very successful fund. That is a pure deep tech fund, and we have invested in companies in semiconductor, companies in space technologies. Very, very interesting companies are there in space. Companies in drones and other defense. Some of the new emerging areas like in quantum we have invested. We have invested in cybersecurity. So very futuristic areas, very high tech areas is what we are investing in, and we are easily recognized as one of the best funds investing in this sort of areas. What we have started to do as a mix of the fund is, we have slowly started to change the team formation, and instead of just taking, bright young engineers in the team, we have now started to take people who are more from within the industry, so strong PhDs. We have started to hire people who come with, strong PhD backgrounds and a deep understanding of the sectors, is what we have started to hire. Why is deep tech so important? I think you are, if all of us are hearing everybody from the prime minister downwards keep talking of space, keep talking of semiconductor. The government has a number of initiatives, including sovereign funds that they have set up investing in these sectors. And why are these sectors so important? Because in the geopolitical global situation of today, every country of size, and India is obviously one of them, needs to have their own strategy. They cannot depend anymore on the world, whether it is US or China or anywhere, for their own needs in semiconductor, in data, in space, in defense technology, in quantum. So these have become suddenly not just in the fringe, but the most important agenda of the government. And the government is really supporting these sectors. They have created, as I mentioned before, sovereign funds, which are investing in funds like us to grow the whole sector. The other very, very interesting thing, which is not known to a lot of people, is in India, the patents framework has become very, very strong now. So there is a large value to the patents that are there. Any patent infringement, the courts come on very, very strongly against. So because of this patents rule that has come, large number of intellectual property based businesses and technologies have now started to come. The third and most important area for me is that this is that moment in time where the academic institutions and universities, like the IITs, like the Indian Institute of Science, like the IIMs, are all coming together and they are all becoming a part of the larger startup ecosystem. So, in the third fund, we have out of the 22 companies, for 5 companies, we have where there is at least one faculty member who is a co-founder of the business and very, very actively involved. Why is this of relevance? Because in deep tech, unlike consumer internet or software, where you can have 3 4 guys in one room starting a business, in deep tech that is not possible, because in deep tech you need large number of equipments. For example, a semiconductor business, you will need to have $2 million at least of toolkit before you can even start anything else. Testing in a space business, you need to create a zero gravity setup to see how your applications will work in space. So all of these things today are available with all the leading institutes, and that is why, according to me, more and more deep tech companies will start coming out of all these leading institutes. And that is why the fourth fund is really, really interesting for us. Before I go on to the fourth fund, which is the present fund in the series, the third fund has been one of the most well performing funds. Altport had become a good partner of ours in the third fund, and they have got us a large number of investors in that fund. In that fund, today, as I said, we have created 22 companies. We have invested in 22 companies and possibly one more company, which we will announce. No more new companies we are investing. That fund, in less than 2 years, the invested capital is almost close to 2 times. And we have at least 10 of the top 22 odd companies which has had significant up rounds, which are looking to grow very fast. So I think of all our funds, the third fund will be the best performing fund for us. Coming back after that, what has happened very, very interestingly is, given this macro scenario of deep tech that I spoke about, most of the IITs have started to see how they can create their own funds. Although I am from IIT Kharagpur, I must confess that IIT Madras is the clear market leader when it comes to technology innovation, when it comes to entrepreneurship, and they have been doing it from 2012, much before Prime Minister Modi came up with Startup India and all of those things. They have some huge successful companies like Agnicool, like Aether Energy, which is a listed company, like companies like E-Plane, very, very successful companies. So the whole idea that IIT Madras had is that they wanted to create a fund of their own to help companies which are coming out of the various incubation cells that they have, the various research units that they have. That was their idea. And that is why they brought out an open tender in which more than 30 funds had applied. Finally, after a lot of due diligence, they chose us to partner with them on February 6th. And where we are is we have launched 1,000 crore fund with them. We are looking to do a first close of about 450 crores by the end of August. We already have wrapped up about close to 300 crores, and we are in active discussion to close the rest of the investors. This fund, the mix of investors who have come in is very, very interesting. We have on one hand investors who are alumni from IIT Madras, so people like founder of Infosys, Chris Gopalakrishnan, and many other senior people like that who allowed us to use their name are investors in the fund. Then we have, of course, large other family offices who have come into the fund. We have one or two of the large corporates who are looking to invest in the fund. One of the top three IT companies in India is actively looking at putting 5 to 10% of the entire fund size in the fund. We have a very large company from US in the semiconductor space, which is also looking to put a substantial capital in the fund, because these companies all want to get exposure into what is happening in the ecosystem. Apart from that, we have our usual LPs, the some of the leading banks, SIDBI, all of them we are in active talks, but all of them we will onboard after the first close. We already have quite a few investors from overseas, and these investors are not just pure investors, but they will also play a big role in the technology growth curve of all of these startups. So this is basically what we are. We are working very closely with IIT Madras. In the investment committee, two people, my partner Anil and one more senior colleague of ours are there. And from IIT Madras side, they have two people who are part of the whole investment committee. Then apart from that, we have a governance committee where again two people from our side and two people from IIT Madras are there. We have access, the first right of refusal on all deals that are coming out of IIT Madras. So we know these companies for a very long time, much before they are even ready. So we see what is happening within these companies. We set up a two people team in IIT Madras already who are embedded over there, seeing all the companies and doing the research. Interestingly, for us, what I keep saying is this is not a usual fund. For us, this is a part of nation building. For us, giving return to our investors is, of course, the foremost reason why we are in the fund business. But also, we see this fund as a part of our contribution to nation building. And 50% of the carry that we will make in this fund, we will give it back to IIT Madras, and they will then again start investing in the whole startup ecosystem so that it can grow. So this is broadly the mix of the fund. We envisage, like in our earlier funds, our IRR in this fund will also be around mid 30s. That's what we definitely want to ensure. This fund is a 10-year fund because deep tech takes a lot of time. But unlike the earlier funds where we took the money over 4 years, in this fund we will take money over 6 years. So we will take money over 6 years, and I think from eighth year onwards, you will start seeing money starting to return, with it peaking around the ninth, 10th year itself. So broadly, this is about the fund, IIT Madras Unicorn Frontier Fund, and more than happy to take any questions that you may have.
Yeah. So, if you have any questions, speaker audience, then please give me in the chat. I will take up questions one by one. So, Majumdar sir, as you said, the first fund has given the performance of around 53% XR. Second also has given more than 42% XR. Third one is also doing very well. So, what we should expect from this, I think,
I
after.
think what we always say, Vijay, is we say 30% to
Mhm.
35% in rupees term. In dollar terms, we say about 25 to 30%. And then we see how we can outperform that number. But to be on the conservative side, we are saying 30% IRR is what we are looking at.
Okay. And again, as you said, the fund is for tenure is for 10 years, and 6 years will be the drawdown. So every year, how much percentage will be the
So
drawdown?
upon closing, we are taking 15%. And I
Mhm.
think, of course, drawdown will be based upon actual investments we are doing. But just to give comfort, I think every year will be around 15 to 20% broadly is what we are looking at.
15 to 20%
Yeah,
yearly.
every year. Yeah, in between that. And
Okay.
upon closing, we are drawing down 15%.
Mhm. We have one question. What is the minimum ticket size for this fund?
This fund, given the nature of the fund, the minimum ticket we have kept is 3 crores, so 50 lakhs a year broadly over a 6 year period.
Okay. 3 crore is the ticket size.
Yeah. And of course, I know this is most more in India audience, but we also have a Delaware feeder structure through which
Mhm.
most of the US and international investors are coming in this fund.
Okay.
And that's the most tax efficient structure for any, especially for any US investors to come in. So although I know this is an India call, but still I thought I'd leave it with you.
Yeah, please, if you can elaborate on the international or Delaware fund also, that will be because our clients are from US as well.
Yeah. So, Delaware, we have a feeder structure. What a feeder structure does is that feeder fund exists to invest only in the India fund. And then it is very, very tax efficient structure because Delaware is as a place, there is no taxation. There is no leakage because AIFs, as you know, is a tax pass through fund. So the entire profits are passed on straight to the Delaware fund. And at the Delaware fund, again, there is no leakage. It goes straight to the back of the investor. And if there is, in some cases, withholding tax over there, back in US, you can, get a uh, tax refund on the withholding tax over here. So there's no tax leakage for US or international investors. You don't have to have India PAN card or anything else. It's as good as investing in a US fund. And that's why our US investors love the structure and they all come to the Delaware structure because of that.
So in the Delaware structure, all the NRI clients can invest in that fund.
Preference is mostly US investors. I mean, they love it. Depends on which country you are and what your treaty relationship with US is. So Hong Kong, Singapore, Africa, all of these people love the Delaware structure. In case UK investors are there, they prefer sometimes to come straight rather than get into the US network.
So we have another question. Are all these companies in the new fund are from the IIT Madras, or you will restrict your choices?
It's a very good question. I should have clarified that point. When we started the fund, the idea of the IIT Madras director and the leadership was this would be a fund only for IIT Madras. But we impressed upon them that while IIT Madras has great companies, it is not a very big gene pool in that sense, and there are other good companies elsewhere. So then we said that we have to be fair to our LPs, and we want to get the best companies for them rather than just restrict it to IIT Madras. So while we have the first look on companies in IIT Madras, this fund is not restricted to IIT Madras only. Uh, we don't have any regulatory percentage as to how much we can do in IIT Madras. But broadly, we are working to see one third of the companies are from IIT Madras and the rest are from wherever we get good companies. Also, one of the reasons why IIT Madras chose us is because we have deal sourcing capabilities from everywhere. For example, if we find a very good company in Bhubaneswar, we will actually take that company to IIT Madras, and that company will gain because they will get access to the different aspects that IIT Madras has to offer. So for us, it's getting the best company and having a first look at IIT Madras companies is what differentiates us.
So the next question is, what is the minimum euro investment in Delaware framework?
It's $500,000. Oh, $500,000. So in euro, it will be about whatever,
But
$450,000.
they can invest in euros, or it has to be invested in dollars only?
We just have a dollar structure over there.
Okay, only in dollar structure.
Yeah.
So, so in what is the minimum ticket size in the Delaware framework?
$500,000. So
Half
in
a million.
euros, in euros, it will be about 450 or whatever.
Okay. And when will be the first drawdown, and how much percentage would be?
So the first drawdown is upon signing. We are looking to do a first close by end August. And 15% of the entire committed amount is the first drawdown. So anyone is committing $500,000, so 15% of that is the first drawdown.
Okay. So 3 crores is around 45 lakhs.
Yeah.
And this drawdown happens only once in a year, or
So the first one we are doing once in a year, and then as and when we do so. But as I said, in no year will we do more than 20%, but that also will be over, I think, 2-3 drawdowns. So we'll try to minimize the drawdown to possibly one a quarter or something like that, so that we don't keep asking for small amounts of money always. So
Mhm. And anything new that has been came into the framework with the experience of first three funds that we have introduced in series
something
two?
new which we have introduced, Vijay, is given uh, the SEBI regulations, there was a dichotomy not in our fund but in the entire industry. The dichotomy was that early investors who came in, who helped the fund to grow, they would indirectly be at a disadvantage because you would take in investors even 1.5 years later, and the cost would be the same for them. So because SEBI did not allow, enhancement of the value of units, so the whole industry had this problem. I think we would be among the first funds who have taken a decision to take a hit on our commissions, and we are seeing people who are coming in the first close. For them, we will have 0.25% less as a management fee. So typical management fees, as you know, in a third fund also is 2% management fees. So this time, all people coming in the first close, we are taking a management fees of 1.75%.
Okay.
So this is a learning we've had from the earlier funds, and this we consciously took a call to take a hit ourselves in the management company, to be fair to our early investors. And that is why, my request to all our partners and all those people who are looking to invest is to come in the first close, because after the first close we will almost close it to individuals. We'll just focus on the institutions with whom we are having active discussions.
There's one more question. Uh, are there any focus sectors within deep tech that you're looking at this fund? Uh, who's and what is the company sector-wise mix, unlike that differ from Unicorn Series 3, and which you also focus in
So
deep
I
tech?
think more or less this would be a sector wise, it very similar to series 3 invest sectors. It will be semiconductor, it will be defense, it will be space, and similar. One sector where the number of companies will possibly be more, because that is one of the strongest sectors in IIT Madras, and they are clearly the leader in this sector throughout India, because they have a fantastic faculty, is the whole area of biomedic, data sciences around health. So that sector, we have about 3 companies in the first fund, maybe 2 companies in the first fund. I think that will be a sector which will be slightly more in this fund rather than the fund 3. But other than that, more or less sectoral themes will be very, very similar.
Can you just give us some example of past companies in the previous series which has done exceptionally well?
You know, There are a number of companies which have done well. I'll just pick up one company in space. It's a company called Orbit Aid. That company, as we speak, is raising a 150 crore round, and the expected valuation of that company from where we invested is about 25 times. If the term sheet that we are talking about comes through. This company does refueling in the sky, and obviously after the success of Skyroot, the few companies in space who are looking to do a launch in the next 6 months has started to get inbound interest from investors. Another company called Netra Semi, where we came in at 100 crores as a first check. That company has already raised from Zoho something like about 100 crores at a valuation of 750 odd crores. So, 6 7 times appreciation we already got in that company. So like this, there are a number of companies. There's another company called Bonvi, which is in the uh, unmanned vehicles or drones basically, but specialized drones in low tech areas. There also a round is happening, which will give us 5x, 6x appreciation in less than 2 years. Then there is a company called Orashore, which is in the climate tech area. They have sensors which gives you the air quality control levels. They work very, very closely with Google all over India. So that company, we went in at a meager valuation of 20 crores, put in 4 crores in 20 crore, 16 crores actually, 20 crores post money. That company has raised money from us and Rain Matter, which is the Zerodha Founders Fund, at 100 crores, 5 times. And then there is one company which is unique company. Very few companies raise that much and scale up that much. A company called Nava, which is in private cloud, competing with AWS and others. Uh, they raised, even by our standards, it was a big amount, 13 million dollars, first amount of money where we put in about $2 million. Within 3 months of that, or 4 months of that, they raised $28 million from one of the biggest hedge funds in the US. And now, again, another 6 8 months, they're raising about $120 million at a substantial valuation. They've still not closed the round, but huge. And they are in the infrastructure business, data infrastructure business, and huge interest they have not only in India but also in Singapore and South Korea and all of that. So these are some of the companies. We've got another company which is again scaling up very fast. They are the uh, payment gateway for WhatsApp. So they are the only ones in India who does payments on WhatsApp. Again, scaling up very fast. A number of investors have come in. So the third fund portfolio is looking very well, and a large number of companies have scaled up, and there's a huge interest in a few others.
I think one of the USP with all the deep tech funds is like, all these businesses are very high capex business because before starting they need to use a lot of capital. So entry barrier is high. Secondly, the pedigree of the founder has to be very high because understanding a deep tech and making a business of it. So which gives a strongest barrier for the new entries. And
Absolutely,
so that stands
absolutely.
out in a
Yeah,
deep tech.
and as I explained, as venture capital firms also, we are constantly having to change our knowledge base. That is why now we have stopped taking generalists, engineers from leading schools and working in the consultancies to going and hiring more and more PhDs. Because these are very high technology areas, very deep technology, and that is where partnering with IIT Madras is really good because you can use their full faculty and everybody else to guide us through the decision making process.
So we have one more question. Are there any deep tech sectors that you see in India having the possibility to merge as a market leader vis-a-vis US or China?
It's a very good question. Honestly, there's only one sector I can see within that. Actually, two sectors, and they are very closely aligned. One is in space. You know, because what India is doing in space is literally at about not half or one fourth of the price, but literally one tenth of the price. I mean, Skyroot has had an actual launch at 154 crores. It is quite unthinkable. 154 crores is like 20 million, less than $20 million. And they've had an actual launch. The company I spoke about, Orbitate, they are ready to have a launch. In fact, they had a launch in the PSLV failed mission, PSLV 62, which failed. Otherwise, they would have been in the orbit, and they have raised till now $4 million. A similar company called Orbit Fab out of US has raised close to $60 million, and they're behind them in the whole technology readiness level. So space is one area where India will really be a leader in doing low cost innovations. The other area, I personally think, which where it will be very India centric. I'm not saying it will be a path breaker, but it will be India centric is in defense. If you see till about 4 5 years ago, India was a net importer in defense. Last year, $21 billion of defense exports happened. So, what is happening in defense is India has created a niche for itself to become a defense provider for the global south. So, if you go to Africa, if you go to places like Indonesia, all these places, India has now become the defense supplier rather than a France or a US and all of this. So I think these two sectors are clearly niches where India will have to grow. I think semiconductor is another area where the government has aggressively come with a plan for the semiconductor sector. One sector which I'm personally, I think that a lot needs to be done. A lot means a lot, and India is really lagging behind. Is the whole AI space, whether it is in the whole number of chips that are there in India. Total NVIDIA chips that are there in India is less than what is there in one center of SpaceX. So, in the AI space, India has a lot of catching up to do, and a lot of thinking and capital has to go in from the government. Just as they have managed to do it in space, they have created a separate agency, they have done it. So, they have to get their act together in AI. So,
So here the fee structure will be 1.75, as you said, for the first drawdown,
first close.
first close. After the first close,
It will go back, revert back to 2%.
2%. And the management fee will be charged on the commitment amount or the drawdown amount.
Commitment.
There's one more question. Is it too late to invest in AI related businesses? Because
On this, I have a personal view, and you will see from a portfolio construction. Other than one company, we have not invested in any companies which is which is very AI led in the application layer. So we have invested mostly in companies which are in the AI infrastructure layer. So my personal view is whenever a sector is growing very fast, but nobody is sure who the winners in that sector will be, it is best to invest in in the infrastructure layer, because the sector itself will grow, and then the infrastructure providers will always grow. But which application will do well, it is very very difficult to gauge out. There are other VC funds who are going all in on applications. We as a fund are not doing that. We have possibly one company only which is a pure AI application company from a third fund, and I think that is what we are carrying on in our thinking in this fund as well.
the other one is some personal question based on your expertise and the passion towards the investment for quite a long on the deep tech sector. One of our viewer wanted to know what's your age, sir?
Ask him to, or you take a guess, Vijay.
I think 70 around.
70? Come on. No, 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 nowhere near that. I'm 57, going
Oh,
on 58. Yeah.
your passion towards the sectors and everything is seems
Yeah,
very young.
yeah. But I hope I retain the passion when I'm still 70. So I like that answer.
Yeah, I think you will have the same passion, too, sir. So for it is open for all the NRI and
Yeah,
Indian clients. For Indian client, they can take from the normal route. For NRI client, they can take from Delaware route, which is a tax efficient way, and preferably mostly US, but all the other country people also can take it. Based on
sure.
their respective country, the taxation structure will change for them.
Yeah.
Thank you for having a wonderful session with you, sir, and hope
Thank you.
the doubts of all our clients have been cleared in the session and they understood this product very well. Thank
Thank you.
Thank
thank
you,
you.
Vijay.
Thank you, Vijay.
Thank you, Praveen sir, for arranging.